As we saw in the last lesson on Bollinger Bands, combining an indicator with an oscillator can help to confirm a trading decision. Let's look at the most popular of these and see how we can use them in our trading experience. An oscillator is a type of indicator used in trading that moves between two levels on a graph, so therefore, by definition, it oscillates. Oscillators are used by all level of traders to indicate or confirm changes in direction, or reversals as we call them. There are a variety of oscillators available on MT4, and we will look at 4 of them. In our video on Bollinger Bands, we looked at the use of the stochastic oscillator as a confirmation tool to attempt to spot reversals in conjunction with the bands. Just select this as you would any indicator and leave the settings as you find them. When you click OK, this indicator finds itself in a separate window below the main chart. This is typical for 2 reasons. 1. Aligning and synchronizing with time is critical for combining the information with price action. You may use the crosshairs to good effect here. And 2, these are completely independent of price. The stochastic oscillator consists of 2 moving averages which compare the closing price of each candle to a set period and plots the results between 0 and 100. A figure over 80 indicates that the asset may be overbought and a move to the downside may occur, and conversely, figures below 20 may indicate an oversold situation and we may be looking for a reversal to the upside. A great example of this is the $Swiss 15-minute chart showing an oversold situation. 4 candles had already touched the lower Bollinger Band, but waiting for the stochastic reversal above 20 was prudent. In this case as well, stochastic stalled here above 80, and when the 2 moving averages crossed to the downside, a clear reversal started as well. This window may be altered in height and may be deleted by hovering over any line, waiting for the description box, right-clicking and selecting Delete Indicator. Let's go back to our indicators and select Oscillators, MACD. Like stochastics, the moving average convergence divergence uses 2 moving averages. It compares short-term market momentum to long-term market momentum. The MT4 version of this indicator consists of a histogram and a signal line. The premise is that when the histogram rises above or below the 0 line and the signal line crosses through, this is either a buying signal or a selling signal. Again, your crosshairs can line up the chart candles with your MACD indicator. Next, we have the relative strength indicator, or RSI. This is a momentum indicator and looks at the speed and price action comparing average losses and average gains over the last 14 periods. The RSI can be used in 2 ways. Firstly, as the indicator oscillates between 0 and 100, we can consider anything below 50 a downtrend and anything above 50 an uptrend. And, similar to the stochastic oscillator, anything above 70 may be overbought and anything below 30 may be oversold. Finally, we have the Parabolic SAR. This indicator was developed by the same technical analyst who created RSI and is also used to plot momentum. Basically, a dot or series of dots below price indicates a bullish trend, and conversely, dots above indicate a bearish trend. To review, in this lesson we looked at launching and deleting an oscillator, the stochastic oscillator, the moving average convergence divergence, or MACD, the relative strength index, RSI, and the Parabolic SAR, which stands for stop and reversal. In the next lesson, we will look at Fibonacci on MT4.